Well, I'm going to bring in Bloomberg's Pimm Fox right now for a look at some the shares of one insurance company that haven't been hit by bad investments or write-downs.
That's right. They bet on death. Unfortunately, the company is Life Partners Holdings, and while you might disagree with the nature of their business, Viatical Settlements, the stock has more than doubled in the past 12 months. Here's a chart of the shares. Now, Viatical Settlements, they involve the sale of life insurance policies that cover a person with a terminal illness. Life Partners is also involved in life settlements. That's when you transfer a life insurance policy from a person who's, let's say, 70 years or older. They don't need the coverage anymore, but they would like the cash. So far, the company's business remains solid, and Brian Pardo, that's the CEO, he said they might actually do another stock split later this year. Life Partners announced a 5-for-4 split earlier this month. Now, the drop in the stock market and tougher economic conditions could make business for Life Partners even better. Now, the company typically arranges for investors to purchase insurance policies from people aged, let's say, 78 to 82. They need the cash to make up for a drop in assets, such as real estate, stocks, or bonds. Is this a growing field? Indeed it is. The market for annual life settlements could double to almost $15 billion by 2016. That's according to research at Conning Research and Consulting. And so how is the business at Life Partners doing? Well, revenues jumped 46% in the most recent quarter. That's compared to the same period last year. $28 million, up from $19 million. Income from operations increased 41%. Pre-tax profit rose 40%. Other good numbers for the EPS numbers, they climbed 39%, and per share that moved from 44 cents up to 61 cents. Here are the net income numbers. Take a look at those. And now, as far as the balance sheet is concerned, everyone wants to know what's going on with companies' balance sheets. Current assets, they went up by 17%. It's mostly all in cash, about $30 million. Current liabilities, they went down 40% from about $11 million to about $6.5 million. Now, the current ratio, that's a good industry thing to look at. That's the current assets that are divided by the current liabilities. It's an eye-popping 4.5 to 1. Working capital of about $23 million. And with total assets of $45 million, that was up from 31 the last year. Total liabilities, they went down from 12 million down to 7. Pardo, the CEO, he also happens to be the largest shareholder in the company. He owns about 50% of the stock. He says the company's performance is non-correlated. That's a magic word these days. He said that it is not tied to any index, that it makes no difference what rates are, what the price of oil is, and it really doesn't matter what's going on in places like Iran, Iraq, or even Afghanistan. Analysts at Taglich Brothers, that's the brokerage firm, they have a speculative buy on the shares, and they say that by 2010, revenue should have grown by 20%. Their price target is $51 a share. They're betting on, well, the Grim Reaper and grim economic news. Back to you, Matt.